Part 2. Es ist kreativ. Es ist kreativ. Sam.
What's up, guys? Welcome back to another episode of... This is not the Lobola Challenge. I'm used to recording the Lobola Challenge, but welcome to another video. This is part 2 of the unit trust episode, or the top unit trust episode. Just a quick disclaimer, or two things that I quickly want to fix from last time. The funds that I'd shown you, saying the top performing funds, that was just for the year 2019 that I showed you, so it's not actually what I wanted to show you. What I wanted to show you is what's on screen now, which is the top 10 performing unit trusts over the last 10 years, being this Old Mutual Global Equity Fund, Net Bank, or Net Group rather, Investments Global Equity Fund, the Centaur BCI Fund, Investec Global Franchise Feeder Fund, Alexander Forbes Global Equity Fund. I guess what you're getting from this is that in the last 10 years, global equity funds are pretty much the best performing things that you could use or put your money into, and that is generally what you need to be looking for long-term growth, these global equity funds. If you just go down here, you'll see even Discovery's one, Stanlib's one, Net Group have another one, Allen Gray have a global equity fund, so even APSA have one. So I would say that global equity funds are the way to go in terms of looking for a long-term solution, because I mean annualized 18% every year or over the last 10 years is a really good return, because I think in the same period the S&P 500, which is the benchmark by which you sort of measure everything else, has grown by an annual rate of about 10%, and if you adjust it for inflation, it's sitting at about 7%, right? So this 18%, if you were to adjust it as well for inflation, you'd probably be looking at more or less 14-15% growth year on year, which I think is quite good. But yeah, that's not the point of today's video. For today's video, we need to go into part 2, and just another disclaimer that I want to make. Some of the funds that I'd shown the last time, I think were, at the time when I initially sourced the information, doing quite well, and since things have changed, so some of the percentages won't be as high, or all of the ones here I think today are all higher than some of the other ones I had that side. The last time I had a few in the 20s, which wasn't the highest performing ones, but they are there. So yeah, let's get into today's video and see what are the next 5 best performing index funds in South Africa. Okay, so we've got I think it's NAVIGA or NAVIGA, I have no idea, BCI Worldwide Flexible Fund. This one, over the last 1 year, it's grown by about 81%. These are the numbers that we are looking for. These are the numbers that we really want to, yeah, this is what we're actually aiming for if we were to go into something. I obviously don't know this company, they're not particularly popular, but if you just look at their top 5 holdings according to this, it's Shopify, Gameswork, Apple, AMD, and Visa, which all good companies. You could argue it's maybe blue chip stocks, but yeah, it's another thing by Boutique Collective Investments, which actually featured in our last video. I hope you're picking these things up, that there's certain companies that keep popping up, and maybe that's where you should be. So yeah, in this fund they actually show you what the allocation is, or what they've got. Top one being Shopify. I think we did speak about Shopify last time. Games Workshop, I think they make board games. I stand to be corrected, but I think they make Monopoly and a bunch of other board games. You've got Apple Incorporated, another really big good company, actually just passed the 2 trillion market capitalization mark, which is quite good. Well done to Apple. We'd like to get into Apple at some point in the future. We just don't know when that will be, but yeah. AMD, they're a microchip company, so they create the processors and graphics cards that you use on your computers. Might not mean much to you, but to people who know what it is, it's quite good. MasterCard, we know. Visa, we know. Five9 Incorporated, I'm actually not sure what that is. We'll take a look at it maybe. Microsoft Corporation, Microsoft, we all know them. Amazon, I think I spoke about Amazon recently as well. And Nvidia, similar to AMD, they make microchips, but they're specifically more focused on graphics cards, whereas AMD does processors, graphics cards. Nvidia mainly does graphics card, and I think they were quite instrumental as well in helping Tesla with their self-driving efforts. I think a lot of the technology that was in earlier day Teslas with their autopilot system, they were basically using NVIDIA chips for that. So this is really good that in the last 12 months it's grown by about 81%, which is amazing. This is the content that we're signing up for. So this is one that really I would also put my money in. And the nice thing versus the Old Mutual Gold Fund that we looked at last time, the main one with this one, is that it's in tech, and it's another theme that you must pick up, that some of these high growth or high growing unit trusts are either in one of two industries. If you're looking at a South African perspective, they're either going to be in tech or they're going to be in minerals, so being your gold and your platinums and whatever the like might be. So just keep that in mind as well, that the performance of these relies on those two industries, and meaning you sort of just need to keep your ear to the ground with regards to how those two industries are doing. Okay, and next we've got is it Singa or SINJI? Please forgive me, I don't know how to say these things. But this fund, which is an FAANG or FANG, the FANG stands for Facebook, Apple, Amazon, Netflix, and Google, who's actually called Alphabet. Yeah, that's FANG. It's just the term used for these companies, these big tech companies. I don't know why they're hitting on Microsoft, because Microsoft doesn't fit in FANG, I guess. It doesn't fit the acronym. But yeah, that's the first thing that you must see. If you see FANG anywhere, just know that they're invested in Facebook, Apple, Amazon, Netflix, and Google. That's all that you need to know. But yeah, over the last year, it's grown by about 75%. Amazing returns, amazing returns. Here you'll see they're going to sort of what they're in, and as I said, Alphabet, Google, which is Google, Facebook Incorporated, Amazon, Apple. Yeah, it's this company, the Singa Collective Investments, which I've heard a few things about here and there. If you actually go into the fund performance, and maybe this is worth looking at the fund performance or the minimum disclosure sheet. You know, you always see, they'll always tell you what the risk profile of this particular unit trust is, and this one is high, hence why it's yielding what it's yielding. And it'll also tell you the time horizon, just sort of the time that it would take for you to realize the full benefit that they're trying to achieve, right? And there's other information. It tells you the portfolio managers, Regulation 28. Maybe that's something that we'll go over shortly, or in one of the upcoming videos. When they started, 23rd of August 2018, so it's been about 2 years. Size of the fund is about 300 million. Unit price, units in issue, yeah, you know, things like trustees. These are all things I don't really care to know about. I'm sure it's important in some other way, but for me personally, means nothing. Biggest thing I look at is the top 10 holdings, and as I said, Alphabet being Google, Apple, Amazon, Facebook. They've got Alibaba. If you don't know what Alibaba is, it's essentially just the Amazon from China, which is quite good. Twitter Incorporated, Bidao Incorporated, that's another network. I forget what they actually do, but yeah, they've got Netflix, which we all know what Netflix is. Overstock, I'm not sure, and NIO, also not sure what that is. I'm sure we can find it somewhere. But essentially, what you're looking at with this fund is Facebook, Apple, Amazon, Netflix, Google. That's the crux of what you're getting here, and they've obviously thrown in other things just to help with that. Yeah. Okay. Then next we've got the One Invest S&P 500 Infotech Feeder Fund. This one has grown by about 60% over the last year. Still wonderful type of content that we're signing up for. This one, yeah, 60% over the last year. I think another thing that maybe stands out from the name is the company being One Invest. They've featured before, S&P 500, so that tells you it's a company that's on the S&P 500 or chooses companies on the S&P 500 for this fund, and it says infotech. So you know that this has to do with tech specifically. Obviously on this site it won't go into details, but One Invest is actually a product of Stanlib. So again, you should be keeping a big eye out for, not keeping a big eye out for, but I think Stanlib is one of the better companies to have your unit trust with from what I've seen so far. They seem to be doing a lot better. I mean, notice how on my list there's no company like Satrix, which I always hear all over the place, particularly when you're speaking about tax-free savings accounts. You always hear Satrix or whatever, but they've not featured anywhere in this list. So maybe before you invest with them or open a unit trust with them, just do a bit of research, find out what or who is out there for you. But anyway, the S&P 500 or the One Invest S&P 500 Infotech Feeder Fund, again, has a risk rating. It's aggressive, 5 years. You know, it goes into a whole bunch of other things, and it's really worth reading all of this before you actually invest in something. But yeah, they top holdings is Microsoft, Apple, Visa, MasterCard, Intel, Nvidia, Adobe, PayPal, Cisco, Salesforce. So you just know this is tech. This is just pure tech. I will say it's a bit heavy towards Microsoft and Apple. Almost about 40% of the fund is just in two companies. But it's the best two companies that you can have it in. Apple and Microsoft, you really can't go wrong with those two guys right now. So I would definitely get involved in something like this. But I think another thing that you need to maybe do is think about this as ideas for what companies you should be choosing in your own personal capacity. Because I think that it's a really good place to get a bit of insight or info into what direction other people think the market is going in. You need to understand that these funds are managed by fund managers, you know, who have analysts who help them to research these things and make decisions on which companies are the best to go for. And they obviously collect a fee for that. If you just cut out the middleman and you know, don't go through these guys and actually pick these individual companies yourself, you'll get a lot more exposure to them. Meaning when Apple does its stock split and their price continues to rise, you'll get the benefits of Apple alone. But on the flip side, if Apple is doing badly, you'll see the downside of it. So you kind of need to find a balance between the two. But in terms of getting ideas on companies to look for, I would legit go find top performing unit trusts, see what they're invested in, and then kind of go with that. Okay, and the last in our top 10 is 91 Commodity Fund. 91, again, not a company that I know, but this fund has done really well. It's grown by about almost 57%, which is almost about 60% over the last year. Really, really good. If you scroll down, this one, similar now when you're thinking about it to the initial fund we had looked at, or the number one fund being the Old Mutual Gold Fund. You've got Anglo, BHP Billiton, Anglo Gold, what's DR? I forget what DR is, and Goldfields, but just South African gold companies. This one is 91 fund managers. Again, I didn't know about them before this video, but clearly they are doing something right because they've chosen a few really good companies. And here, risk profile is potentially lower rewards but a very high risk, so it's a number 7 on this scale. You know, portfolio manager is a billion rand fund, so clearly this is a really big thing. I mean, the other one that we looked at was about 300 million, which is small compared to this. And that's also something else that you need to maybe look at, is the actual fund size, because I think the bigger the fund size is, the more likely there are, or a particular company is, to look after a particular fund. Because I mean, if you've got a 50 million rand fund versus a billion rand fund, you're going to make sure that the billion rand fund is better managed than the 50 million rand fund. Not to say that companies would neglect this one, but you just need to make sure that you're keeping on the billion rand one. Anyway, as we scroll down to see what they are invested in, and their top equity holdings, like I said, Anglo American, BHP Billiton, Anglo Gold Ashanti, Goldfields, Sibanye, Anglo Gold Platinum, Impala Platinum, Sasol, DRD Gold, Mondli. So these are basically mineral companies. And actually, if you look at their allocation, it's about 97% minerals and about 2% into financial companies. So again, you need to look at what industries these companies are in and see that these are the companies that are growing in these periods of time. So just always keep an eye on that. So I know that we had our 5 companies completing our top 10, but I just wanted to add an honorable mention, which is the Old Mutual Global Equity Fund. If someone was to give me a large amount of money, a lump sum, if I was to win the lotto, for example, and I didn't have a clear plan on what I wanted to do with that lotto money, I would 110% put my money into this fund. Reason being, if you look at the 3-month change, 6-month, 1 year, 5 year, 10-year change, it's all positive. Over the last 10 years, this thing has grown by about 21%. And like I said initially, S&P 500 has grown by about 7% when you take into account of inflation. This one, I'm sure if you take into account inflation, is maybe at about 15-14%. So I think this is an amazing fund to be a part of. Yeah, like I said, if I had a lump sum of money and I had a lot of time, this is definitely where I'd be putting my money, because the returns are there for you to see. And they're invested again in Microsoft, Apple, Amazon, Facebook, Visa, all of these tech stocks. It's obviously being managed by Old Mutual, and when we look at the fund sheet, they say it's a moderate to high risk profile, so it's not quite the 7s that some of the other ones were. At least 5 years in this fund, and I mean, since inception, the growth has just been exponential. And I think it's worth reading, you know, these minimum disclosure documents, because they go over the fund objective, who it's for, the investment mandate, regulation 28, all of the like. So when you're going into a unit trust, go over this in great detail, because it can tell you a lot of what you need to learn. You can actually learn quite a bit from just reading unit trust minimum disclosure documents. And if we look at their holdings, Microsoft, Apple, Amazon, Facebook, Visa, Johnson & Johnson, Procter & Gamble, Alphabet, MasterCard. Essentially what this is that it's all of these biggish companies that are doing really well, blue chip stocks if you'll have it, but in very small portions. I mean, you look at the amount of Microsoft in this fund is 23%, but then if we go back to which one is this one? The one Invest, the Infotech one. They're about 21% into Microsoft. So the exposure is really different. Here they've got a very small exposure to Microsoft. So if something bad does happen at Microsoft, you won't feel the pinch as much as you will with the One Invest S&P 500 unit trust. But the fact of the matter is that your money is therefore then better protected, because it's got a better spread of the international market versus what you'd have in the other fund. So that's just something to consider when you're doing this. Also, you know, I always get interested when I look at the fund managers and what they've done. I mean, the main fund manager, the first guy they list, he's got a BA in chemistry and a PhD in chemistry. So essentially, there is a chemist who's choosing what companies to invest in. Second guy, he's got a BE engineering in robotics, computer science, and then finally, he's a CFA, which is a chartered financial analyst. So, you know, you need to actually look at it that these guys maybe didn't study this in particular. I know financial advisors or fund managers, you know, you'd expect them to have some kind of commerce qualification, but none of these guys have anything that's directly related to commerce, yet they're managing this huge fund for Old Mutual. You see, if you look at the size of this fund, 17 billion rand. These three guys who don't have a BCom between the three of them are managing 17 billion. So it goes to show you that you don't necessarily need to have a qualification or need to have gone to school and studied a particular thing to know how to invest in companies. These guys are doing it just off of the qualifications that they have there, and that should be encouragement to you as well, that even though you might not have a particular degree, or you might have not gone to school, or whatever the case might be, you can begin an investment journey. You can make serious money off of it, because Old Mutual and us are trusting these guys to pick companies for us. How much more then can we do if we just apply ourselves ever so slightly? And I think that's the main crux of this video, is that get started. Look for ideas from unit trust, because there's a lot of good ideas that these guys are coming up with, or a lot of good companies that they're doing research in. Know that there are teams of people who are every day analyzing each and every one of these companies, going through everything with a fine-tooth comb. And I'm telling you, if these funds are investing in these companies, you should be too. It should be a really good indication that this actually is quite a good company to be in, because these guys, it's their job. Their job is literally to make sure that they make you money on your money. And if you can just cut out the middleman and do it for yourself, how much more can you make? It's been your boy, Pro MG Money. Thanks. See ya.